Hello, I'm John McArthur, Chief Investment Officer at Krilogy. As 2022 is underway and a 6% market correction has unfolded at the time of this recording, I'd like to detail a few market crosscurrents that will likely have influence over the remainder of the year. A few of these factors include the inflation dynamic, consumer spending, corporate profit margins, and Fed policy. With the recent and shocking consumer price index print of 7% year over year, it's fair to say the Fed has underestimated inflation relative to their transitory stance throughout 2021. Therefore, it's right for the Fed to talk a more hawkish monetary policy stance. However, what they say and what they do remain the critical question as 2022 unfolds. Granted, the environment this year is different than 2019, but leading up to that year, for reference, both Goldman Sachs and JP Morgan were predicting 4 rate hikes, similar to the current environment. The Fed actually ended up cutting rates 3 times in 2019. Now, I'm not suggesting rate cuts are in the cards, but we are entering a decelerating growth environment, so it's hard to believe that they'll be too hawkish in a midterm election year as the pandemic-influenced components of inflation continue to cool off. We should also be reminded of the Fed's shift in policy last year that went from a forward expectations view to a data dependency view. This allows for some level of patience that a portion of their transitory inflation narrative still plays out. And the data should bear this out over time, as it appears to perhaps already be doing. As seen in the chart below, the month-over-month CPI readings have been declining since a potential peak in October of last year. In addition, historical data from Natixis shows that a decline in the ISM Manufacturing Prices Paid Index has historically led to a decline in the CPI index, and it's recently declined in a meaningful way. If we shift focus to the health of the consumer and corporations, I'd like to point out that not only are we coming off historic household savings balances, which can support future consumption, but Americans across each income decile have experienced a meaningful increase in net assets relative to the end of 2019, as seen in this next chart from Pantheon Economics. From the corporate view, profit margins were close to a record 13% last year. And while they'll likely decline, it allows the ability to withstand some level of rising input costs and wage pressures, which should abate in part over the course of the year and beyond. Bottom line is that we appear to be embarking on a new monetary policy regime not seen in some time after 12 years of varying degrees of Fed accommodation. However, GDP growth, driven by a healthy consumer and ultimately earnings, still should be above trend. To this end, according to Refinitiv, earnings are projected to have been up over 22% in Q4 last year and up over 49% for 2021. 2022 earnings growth should likely be more in line with long-term averages of mid to high single digits, which should help support equity markets, albeit with likely historically normal price volatility than what we've been accustomed to as the Fed shifts their monetary policy stance throughout the course of the year. So the key question for the moment, will the Fed aggressively shift monetary policy into a slowing economy to combat inflationary pressures? It appears they'll have to do it in some capacity, but to what extent remains the important question, as it may have implications for volatility and risk assets as we work through the year. In closing, I'll leave you with 3 important takeaways. Number 1, while some inflationary pressures are longer lasting, peak levels look to be behind us, as we'll likely see pressures ease throughout the course of the year. Number 2, a healthy consumer and corporations will drive an increase in earnings growth for the remainder of the year at an above trend pace more than likely. And number 3, we should continue to expect frequent noise in the financial markets, but stick to your strategy and know what you own and why it's in your portfolio. I'm John McArthur at Krilogy, and thank you for viewing our broadcast.